Uh, I just want to go ahead and ask you guys, when you guys do enter a trade, what do you typically risk of your overall portfolio percentage wise?
About 10%.
About 10%?
I give myself.
I'm pretty new. I do like one contract at a time.
Yeah. Okay. Yeah, I mean, if you're not confident and you're brand new, that's good.
Yeah, I also do one or two contracts. Stop loss usually I never put. So sometimes, lost a lot of money.
Yeah,
So
we're gonna
must learn
go.
how to manage.
Yeah, we're gonna go over that too. We're gonna learn how to set stop losses properly and where to put them. But yeah, for risk management, you guys seem to be pretty much on the right track. I recommend normally about 5 to 20% account risk, and that can also kind of your success rate can also kind of come into play with that. Like for me, my success rate for this month so far is 100%. Last month it was around 96, 97. I typically risk about 30 to 40%, but 10%, 20%, you can never go wrong with that. Sorry, just a bit tired. But yeah, no. So you guys seem to be pretty well off there. I had somebody ask as well about when to take profit. Uh, knowing when to take profit and when to exit a trade and such. So I'm going to go ahead. We're going to go ahead and look at Microsoft here as an example, and I'm just going to go ahead and use the 9 EMA right here on this trade on the 9 EMA. We're just going to go ahead and look at that as an example when it comes to knowing when to enter a trade, and this will also use this as an example of where to set a stop loss and when to take profit. So when you trade the 9 EMA, as most of you know, I'm sure, you're going to want to go long on a candle close above the 9 EMA, and if you're trading the short side, you'll just trade a candle close below the 9 EMA. So right here, for example, on this candle, the close above, so on that right there at about 288.45, that's when we would have gotten in a long position, and we would have wrote it somewhere right here. And if you really wanted to follow the exact rules of trading the 9 EMA, we would have exited right here for a pretty decent profit. So when it comes to me personally taking profit, I don't really set, like a set point to go, close all of my position at once. I typically trim all the way up. And so like say we enter here on the candle close above the 9 EMA there. And then say like right here, we're up 10%. I'll trim, typically I trim about half of my position at about 10% gains. And I'll set my stop loss at break even. Just to, immediately make that a risk-free trade. So even if I do get stopped out, I make 5% on that trade. And then I'll trim, about half of that again in the next 10%. And then I pretty much do it in intervals of 10% all the way up. And as for stop losses, like this right here, with this trade in particular, you can't do. There's two different types of stop losses that I like to use. You can do stop losses that are basically, that correlate with the chart, or you can do P&L stop losses. So basically, you can set a stop loss of, P&L stop loss, which is like you enter a trade, set your stop loss at a 10% loss, and call it good, and you don't exit out unless you're down 10%, your stop loss hits and you're out 10%. Or you can do, trading the 9 EMA. Typically, you'd have to have a stop loss that kind of correlates with the chart because, of course, your exit is going to be on the close below the 9 EMA. So your stop loss is basically, of course, just going to be the close under the 9 EMA, or until you see some other sort of validation to exit the trade. I'm going to go ahead and take a look at SPY 2 really quick.
If you don't mind, can I ask a question?
Yeah, go ahead. Of course.
Would it really make a difference if you use the 10 EMA instead of the 9 EMA?
No, not
And
at all.
no, they don't. Okay. And also, what if you have one contract? How would you, if your portfolio is small and you just have one contract, would you still exit at 10 or at 10%, or would you wait for a confirmation on the chart to exit the trade?
Okay, if you're trading the 9 EMA or the 10 EMA, whichever you prefer, and you only have one contract, that really just depends on risk tolerance. Personally, I would just wait for confirmation of exit. But if you want to just secure that quick 10% profit, then by all means, go ahead, feel free to. But yeah, personally, I would just wait on the close below the 9 or the 10-day EMA. But no, it doesn't matter. I'll go ahead and I'll actually throw the 10 EMA on here as well really quick, just so you can see. If I'm not mistaken, there actually shouldn't be much of a difference at all between the two.
Are you on 5-minute candles or 1?
I'm on 3-minute candles right now.
3-minute.
Yeah.
Okay.
Go ahead. I'm going to make the 10-day EMA pink.
Thanks for
But yeah, see, there's basically no difference between the two. So either one would be all right. I just like the 9. Okay, yeah, but yeah, I would say I'm just going to go ahead and I'm just going to mark, say 433.42, that resistance right there. So there's another way of setting stop losses for those that are having, trouble with that. When I do support and resistance trades like this, I typically do P&L stop losses. So if I were to enter, on the break above 433.42 with good buying volume, as soon as I got in that trade, I would set my stop loss at 10%, and I wouldn't really deviate from that. The only time I would mess with it is, after I trim my 10%, or after I trim half my account at 10% gains, move my stop loss up to break even. And the only time I would be moving my stop loss is to move it up as I am deeper and deeper in profits on that trade. And those are my favorite kind of stop losses, just P&L. They're a lot more simple than chart stop losses. It's typically what I prefer to use, but you have both of those. When you use P&L stop losses as well, you typically want to keep your risk to reward 1-to-1. So if you set a 10% stop loss, then the minimum percentage gain that you want to take profit at usually is going to be 10% as well. So you're not setting yourself up to lose more than you can ever gain. And again, if you guys have any questions at all at any time, just feel free to ask away. If I don't know it, I'm sure Kevin or anyone else in here would feel free to hop right in and explain if I can't.
So do you set the stop loss at 10%? It's after you get in, right?
Yes. And you can, 5% stop loss. Any stop loss is okay, just as long as you make sure your risk to reward ratio is at least, again, 1-to-1. But I typically do 10% since I trade options. Options can be pretty volatile, so 10% gives it, in my opinion, it's pretty much the perfect number for me. And I don't remember who it was. I think it was somebody, a Cheese Spy, I think, Cheesy Spy. He's not in here. But he asked to go over trading psychology. I'm not sure exactly what he meant by that. If I had to take a guess, I would assume like controlling your emotions while you're trading. And there's a few things you can do, to kind of keep your emotions in check while you are in a trade, just to keep those stress levels down. And that's really probably one of the most important things. And I stress this all the time, that your, emotions are your biggest enemy when you are a trader and you are looking to be, to grow as a trader, to do better. Your emotions are going to be your biggest obstacle. Just the stress while you're in the trade, that feeling of euphoria after you, even that feeling of euphoria after you make a profitable trade, and that feeling of anger, and when you make a bad trade, they're all, none of them are your friend. Um, and a few ways to kind of keep those in check is try, say you risk 5%, you use 5% of your account in a trade, and you're still dealing with a lot of emotion. Start risking, 2.5%, 1%. Just keep risking, less and using less of your account until you kind of those emotions aren't there anymore, and then slowly work your way from there. So, if it takes using half a percent of your account, 0.5% of your account in one trade to not feel any emotion when you're in the trade, then use that. Even though it's such a small amount that there really won't be much of a difference in your overall portfolio, I can't stress it enough. Use that and just slowly go up, as you get more and more experience to keep those emotions in check. And you'll notice, your ability to stay calm in a trade, it greatly affects your results in the end. And a lot of it also just comes down to practice and experience in the market. The longer you've been doing it, the more you get used to it. It's less of an adrenaline rush. And overall, it's just really just practice. But I do, if you can, like I said, risk less of your account to keep those emotions in check, I 100% recommend doing that. You will see noticeable results. I'm very confident in that. I think you guys have any questions so far? Are we still good to go?
I do have one more question. The volume indicator that you have, would you mind sharing its name?
Yeah, so it is actually, you know who Kevin is, right? Bishop?
Mm-hmm.
That's actually his indicator. He wrote the script for it and he sent it to me. It's basically just selling versus buying volume. The pink over here, that just indicates selling volume, and the light blue, that's just buying volume. But Kevin actually wrote that. I'm not sure. I'm not sure if he would mind sharing it with everybody or not. That would definitely be something to ask him. But no, that is
Thank you.
100% his indicator. You can't actually find that on
Got
I
it.
Thinkorswim.
think he shared chat the last time he was doing one.
Yeah, that's funny. Every time I do a live stream, I have someone ask me about that.
Hey Neil,
What's up?
I have a question regarding the BB bands. The last time
Okay.
I couldn't find it on TradingView, the actual name of it, but the script by who is it? Because there's so many different ones.
On TradingView
Mm-hmm.
for the Bollinger Bands.
Yes.
Give me 1 second. I'll help you with that. So you couldn't. That's weird. You can't find the Bollinger Band indicator on TradingView?
Yeah, but the one that you're using, I didn't know which one it was because there's so many different ones.
I got you.
The last time it didn't have yours was like on top and it didn't have like the script name on it by who it was, and then I couldn't find it.
All right, give me 1 second. See if I can. If I'm right, it should just be Bollinger Bands. Yeah, if you go to your studies, and then just, are you on your phone or PC?
Neither right now.
Neither right now.
No, but it doesn't have a name by who it's by.
Okay, no, there is no name. If you just go to studies and then go to technicals and scroll down a little bit, it'll just be the one that says Bollinger Bands, and that'll be it.
Okay.
If you still have problems, though, of course, just message me and I'll help you out later on.
Okay, thanks.
All right, and the next thing I want to go over, guys, is revenge trading and avoiding, just avoiding that, because that overall, of course, that'll burn you. Say, you just trading SPY all day. You have one bad trade and you kind of get angry and you're like, all right. And so you feel like you have to make up for that by just constantly, you just feel like you have to, keep making trades throughout the day on SPY to kind of recover from that one bad loss. Or it doesn't have to be a bad loss, just a small loss. And, there's no good setups or anything. You just kind of, looking for any type of setup at all you can to validate an entry in a trade. And it's just I I don't even know what it's just not a good mindset to have. Nothing to good can come out of that. I'm trying to find an example here. So just take this for example, right? We're on the 3 minute. Say again, we're just going to trade the 9 EMA, and it's market open, and you hop in right here, the close above the 9 EMA on this big candle there, and then immediately goes against you, and you get frustrated, and you're like, all right, so you're just going to continue trading SPY, thinking you can make up for it on the next trade. You went through here on the close above that, boom, you get burned again, stopped out immediately. And really, the only really good way that I can say to avoid revenge trading is, say you're right here, you get stopped out, you get frustrated. The minute you see yourself getting frustrated and you want to hop back into a trade to make your money back, just, step back, take a break, maybe go, even if it's 10, 15 minutes, just take a small break, come back when you're a bit more calm, because again, it all just comes back to emotions leading into trading, and it's all going to hinder your ability, to actually be profitable. But yeah, if you catch yourself getting frustrated, just kind of step back, take a small break, come back later, see, and another thing, don't just look for mediocre setups, look for really, really good setups, and don't settle for less, I don't remember who said it, but I heard it once. Somebody told me, you trade like a spoiled brat. Only take the absolute best setups you can find. Don't settle for less. Especially if you do catch yourself, revenge trading. But for example, we'll just go off the 9 EMA here again. So say you hop in here, you get, stopped out, and you just step back and take a break for a little bit. And then you come back later on. I'm going to go ahead and just get rid of this really quick. So you come back, 10 minutes later, 30 minutes later, whatever, and then you see, you come back and you're around here, and you see, this setup, this trend line, boom, you play the break above the trend line and the close above the 9 EMA, and you could ride it up, you could have made decent profit there, and you're more level-headed. Maybe you make your profits back, and then you could hop in another trade, say, hell, I don't know, right there, and boom, there's another one. And it's just all about, really looking. And of course, these probably aren't the best setups. It's just, we're here looking at these, and they're just kind of examples of what you could be looking for, like that, for example. But, again, just sorry for the yawn. I'm a little tired.
Where it broke that trend line, you've got that big green bar right there. Are you going to get in on that, or are you gonna wait?
Right here.
No, the first big green bar that closes above your trend line, or are you going to get in before that?
You're
Just
talking about this green
one
bar.
more bar, right?
This one.
Yeah. Would you get in there where it closed above the 9 EMA?
No, I would get in
Right there?
right. Oh, damn, that looks bad. I would get in on this bar right here. That bar, because it closed above the 9 EMA, and it also actually closed above that trend line. So you could get in there, or you could wait, for that small little retest there, and then get in. Either way, it doesn't really matter. It just, again, it's a matter of risk tolerance. You get in here, set your stop loss below the trend line, or you wait for a retest, and you get in right at the retest and set your stop loss barely below. So you get stopped out, at a 2% loss. And, if you're taking profit at 10%, that's a 1 to 5 risk to reward. So that's really good. It's just a matter of
Get out of the trade when it crosses 98, or you can wait for it to hit that trend line again.
You would wait for it to go under the trend line to get out of the trade.
Okay.
Now, when you enter the trade, you would enter on the retest, like right at the very bottom of that candle there where it touched the trend line and then 9 EMA. That's where you would enter.
Mhm.
And then you would
Okay.
play that bounce off of that. And then if you want to look for, where you would exit, if you want to be really conservative, you would exit right there on the close below the 9 EMA. If you want to be just a little bit more risky and see if that was a fake out, because that was a small red candle. So if you wanted to wait one more just for confirmation, you could. But as you can see, it still ended up running up in the end. But yeah, at most, I would, I typically would get out right there. But some people I know wait for the second close under it. Either one works.
So do you wait for the candle to close at 3 minutes before you go in,
Um.
or you look at 1 minute?
Oh, I see what you're saying. Before I actually get into the trade, waiting
Yeah,
for a
that's
candle
right.
close.
Yeah. Do you wait for the candle to close, or like
Mm.
1 minute or 3 minutes?
Yes. So it actually depends. So what I would typically would do is I would start on the 5 minute, and when I'm trading the 9 EMA, I don't actually just blindly hop in. So what we'll do is we'll wait. We'll go stay on the 5 minute and we'll look. And what we're looking for is we're looking for price to constantly respect the 9 EMA. So like say we're under it, right? And we're going to look for a retest and a drop, a retest, a drop. And we're going to keep looking for these constant retests. So it shows, it's treating the 9 EMA as a resistance. So when we do get into a trade above the 9 EMA, we know it's pretty valid because this whole time it's been treating it as resistance. So when it does close above, it's a little bit higher probability. So like right here, for example, it respected it okay, but you'll notice that when it opened above it, it dropped below. So we wouldn't actually mess with that yet. Let's look really quick and see if we can find a decent entry. Yeah, see, so there's no really decent entry there on the 5 minute. We'll go ahead and look on the 3. Okay, right here. So if you see, we had that drop below the 9 EMA. It really wasn't respecting it or anything a whole lot there. It kind of was, but not to the point that I would like. But we had this drop down. We had one test there, another one there. It fell. We had one there, and it, is kind of treating that as resistance. So on this close above it right here, not only is this a strong bullish candle in a good downtrend, but it also closed above the 9 EMA. So combining those two, that would lead me to be, a strong buy. So I would get in there, ride that up, ride this down, and then I would exit right there on the close below that. And that would be, we'd have gotten in at around 4:30.55, and we would have exited around 4:31. So, not the biggest gains in the world, but we also would have trimmed along the way up. So we would have trimmed, a little bit up here at about $1. You trim some up here, so we're taking profit up here as well. But we're completely closing out our trade on the close below the 9 EMA. You got any more questions about the 9 EMA and how I use that? None at all?
Is that the main way you trade?
No. So the way I trade is I actually really, really use Bollinger Bands when it comes to SPY. I use Bollinger Bands and just support and resistance, basic charting, candlestick patterns. But for example, like right here, 433.42, I see, a good strong uptrend, and then we've got this little reversal right here, and I'm gonna, these two candles here, I'm gonna look at as good resistance, and then I'm also gonna kind of use the Bollinger Bands along with that, and just using the Bollinger Band, the top Bollinger Band, and these two candles here, I'm just gonna find a price that really catches my eye as resistance. So 433.42 is just a price that I like for tomorrow. So I believe, tomorrow if we see a break above 433.42 with good buying volume, there could be, there's a possibility of a good run up. And so I would enter calls pretty much the second it breaks above that price. That's my main style of trading. And as for like time frames and stuff, the time frames I look at, I actually look at pretty much all of them. I like to start at the 1 hour. And the 1 hour I really only use for my support and resistance. So let's just find an example here. Like right here, that would have been, an area I would probably have played. See, right here, you could have played the break below that, but there's a huge gap down on that, so there's actually no opportunity to even get in on that, unfortunately, because that looks like that would have been a great trade. But yeah, so I'll start on the 1 hour. I'll just move my way down and go to the 30-minute. And I'll just look again, and what I'll do is I'll mark the prices on the 1 hour, and then I'll just go down to the 30-minute, and I'll just kind of look at those prices I marked on the 1 hour and see if they correlate with the 30-minute at all, or if there's a stronger support and resistance that I see on the 30-minute that I like better. And then once I do that, I'll just move down to the 15, and I'll just keep doing that over and over until I find the support and resistance levels that I like. And sometimes it can take a while, sometimes it's really fast, really easy. But yeah, it's pretty much that simple. Like right there, again, 433.42, 15-minute, still looks like a good price on the 15-minute. I liked how it looked on the 3-minute. So then we'll go ahead and we'll look on the 5-minute as well. And it still looks all right on the 5-minute too. So it's definitely, an area that I would be interested in tomorrow, if we can see that.
Thanks.
But, as it for the 9 EMA, I typically just use the 3-minute and the 5-minute, because I only use the 9 EMA whenever I am day trading, scalping. And I like to combine it with candlestick patterns as well. Also like candlestick and chart patterns, so let me just go ahead, go to Microsoft. I think it's on the 5-minute. Yeah. So right here, for example, you could have, that's actually a good example too. You see that it down here, there's a good strong downtrend, and it respected the 9 EMA as well. So we could have played the close above the 9 EMA, wrote it up, and right here is a pretty strong bearish reversal pattern. So I would have considered most likely, closing my position on the break below that price right there, about 290.85. And the minute that we broke below 290.85, I would have exited my position, and I really strongly, if I would have gotten to this trade, I would have strongly considered going short, just because I really like that pattern right there when it comes to playing reversals. So I really would have considered going short there, and it would have worked out in my favor. I would have got in, here, trimmed all the way down, and then I would have exited right about, probably right around this area. So I would have gotten out my last bit of the position there for like break even overall. But including the trims down the way, we would have exited that in profit. But that's how I really like to trade the 9 EMA. I just like to, make sure price is respecting it, and then make sure there's a good candlestick pattern that I like, and that's something I really recommend for you guys to study as well. Would be candlestick patterns. Those are really, really important in my opinion, especially if you're
So,
a day trader or a scalper.
so that particular one is the bearish engulfing, right?
Yes.
What about a little bit earlier when it breaks above the 9 EMA around, what is that, 1020, 1015, 1020? There's the red candle, then there's two dojis, or very close to dojis here, right there.
Right there. Yep. Yeah.
Yeah,
So.
would you consider that to be a reversal pattern as well, even though the doji are kind of like two of them next to each other?
Oh yeah, no. You definitely can. I wouldn't actually have traded the dojis themselves. I would have waited for this one right here because, I mean, of course, you've got the dojis showing signs of a possible reversal, but then you've got this strong green candle, and it not only closed above that doji there, but it closed above both dojis, closed above the trend line, and it's strongly testing the 9 EMA. So most definitely could have gotten into a long position right there. You were very correct. I didn't
Yo,
actually
Hayden, can you
say
check
that.
main chat real quick?
Yeah, what's up? And where at, Goose? Check main chat in this server?
Yeah.
Asking what I'm recording?
So, it's a question. It's what made you become from an inconsistent trader to a profitable one, and what was the most important things you learned?
Huh, I don't see that. Hang on. Ah, there we
The
go.
question came from Kevin.
Okay.
Yo, Hayden, go to the live session, go to main chat, and you'll find it there.
Yeah, I see it now. That's a really good question. I'm gonna have to think about that. I think what really played a role in my profitability was just being able to establish a set of trading rules. I actually have them. I'll go ahead and actually post them in the main chat for you guys to see. Let me go ahead and just get them copied up real quick. But this, as a beginner, this was a set of rules that I was really heavy on following. Go ahead. That right there. And that set of rules right there, just, following that, that is really what played I mean, I can't stress enough how much of an impact just following a set of rules can, impact your overall performance in trading. Like that set of rules right there may not be the best set of rules ever, but what's important is that it is a set of rules, and what's important is that you follow them and you stick to them. It's not the rules themselves. I mean, of course, they matter. Your risk tolerance and everything will affect the rules that you have in place, but the most important thing about having the set of rules is having the discipline to follow them no matter how the trade goes. Whether the trade immediately goes against you, whether it's going amazingly in your favor, it doesn't matter. You follow the rules, you stick to them, and you don't look back. For multiple reasons. I mean, of course, it kind of gives you a baseline, gives you a good, just something to follow, even with how hectic the markets are. It's just something to stay focused on. It keeps you from panicking. If you're new, it keeps you from stressing out, panicking from all the information being thrown at you from the markets. And Curry, I use Thinkorswim, yeah. But no, just like I said, having a set of rules, following them, it's super, super, super important. And I stress that a lot to anybody that asks, uh, because I've been asked before, what's one thing, if you could just give me one piece of advice to be a better trader, what would it be? And it's always, either to have a set of rules or to do everything you can to get emotions out of trading, both of those. And having a set of rules and following that set of rules really, really helps in eliminating emotions when you're trading. So it's, like I said, just really, really important. And for anybody that needs a set of rules, feel free to copy, paste that in notes, write it down, whatever you want. But I do recommend having something to follow when you enter into a trade. And that is a very good baseline, in my opinion. Do I read the tape level 2, time and sales? Actually, SK, I do not read level 2 or anything of the such. I never really have. If anyone can give me some reasons why I should, I'll definitely consider it. I'll read into it. But to be totally honest, I really don't even know how to read level 2. I've never really even bothered. But yeah, it really doesn't matter. Again, I just want to reiterate this one more time. It doesn't matter what strategy you use. It doesn't matter what your success rate is. It doesn't matter how experienced you are, how new you are. In my opinion, you always need a set of rules, no matter what strategy you use. And that set of rules, once again, pretty much can fit any strategy you have. So, do you draw in your supply and demand zones? I typically draw them while I'm trading during the day. I don't actually draw them a whole lot. I'm still working on that. I'm actually fairly new to those. Kevin actually brought me onto them about a month or two ago. He asked me if I drew them, and I was like, no, not really. I don't really see the point. And he had me watch a video, and they're definitely useful. So I'm still practicing them. But no, I typically just draw them throughout the day if I see any. I don't go out of my way to look for them or anything. Since I'm not, the greatest at drawing them yet, I only draw them if they jump out at me and I see them plain as day. I'm still working on that. Don't laugh at me, Kevin.
Yeah, if I can ask another question. Those support and resistance that you have on the chart right now, were those drawn on the 1 hour time frame?
To be totally honest, I don't remember where I got 291.92 from. I think this was actually from the 5 minute as well. Yeah, it was. It was right here. On this candle here, if I look back right here at the Bollinger Band, this candle respected that area. And so I just kind of used those two again in confluence with each other. And I marked that price out. And on the break above it, it was a quick break.
More like a fake out.
What's up? Is someone talking? But sorry, I forgot what I was saying. Anyways, I just completely lost track of thought. Oh my gosh. Give me a moment. Oh yeah, but anyways,
You were
no,
discussing
so
your
do what?
you were discussing your support and resistance lines, how you drew them out.
Oh yeah, okay, yeah. Sorry about that. But no, so I just saw these two candles here. Looked back, noticed they kind of respected that area, and that little bit of the Bollinger Band kind of caught my interest too. So I mapped that out and would have played the break above that, and it was a quick little run. but it would have netted decent profit, especially, because that was at least at 10%, so I would have trimmed most of my position at 10%, set my stop loss at break even. So, again, minimum that I would have made is 5% off of that trade. So it wouldn't have been a bad trade, but that's how I found that. The 290.56 area, to be totally honest, I think I saw it right there with these two candles, and then looking forward into after hours Bollinger Band right there. I think that's, yeah, that is. Yeah, that's what I used to map that out. I used that little area of the Bollinger Band there, and then those two prices. 290.56 is just the high of that candle, so I just mapped it out. I just used that earlier. I was in a one-on-one with another guy, and he was asking about his risk management and everything. I gave him a set of rules to follow, and I just mapped that price out. I'm not fully confident in that price. That was just an area I saw. He's paper trading, and I was like, hey man, just use that, just to kind of get in the mind, just to get in the habit of following a set of rules. And that's the only reason I have that map there. I'm actually going to just go ahead and delete that.
I have a question. You don't have your support at the bottom. Is there a reason why? Is it because you feel like it's not gonna come down?
Honestly, I just haven't really looked for support yet. But if you want to go ahead, let's go ahead and look at that, since you mentioned that. Okay, so low this candle, 287.70, 287.75, 288.30, and then okay, so 287.68 would be our support there, and I'll explain why in just 1 second. Alright, so the reason 287.68 is, in my opinion, a good support, again, is because right there, that's just 287.70 is the low of this candle that my cursor is on right now. It broke below these two lows just a little bit, but it bounced off the Bollinger Band, respecting that. Again, I really love using Bollinger Bands in my trading. And you can see over here, there wasn't a close. There was actually a bounce off this level. It broke below, closed above it, and then bounced off of that. And then over here, again, just bounced off the bottom Bollinger Band and had a run up afterwards. And the bottom Bollinger Band, on that bounce, its value was 287.67. So I just mapped that out, and that is possibly a good support level for tomorrow. But that's just my thought process going into that. Man, it just started pouring rain over here. I can barely hear my own self think. Okay.
Do you also put more support distance in between those, or no?
You can. Typically, I don't go out of my way to search, for a load of them. I just find the ones that really catch my eye, like that there. If you notice, I saw that in like 3 seconds. I didn't have to really look for that, and those are the ones that I'll trade. I'll trade the ones that I don't have to look deep into. I like the ones that I just look at the chart, see it, and can map it out instantly. A lot of those are typically my best plays, and those are mostly the support and resistance levels that I will trade. Because like I said earlier, and I'll reiterate again, I only like to trade the best setups I can find. I don't go out of my way, giving myself excuses to get into a trade. I won't like falsely tell myself that it's a good setup. I will only enter it if I see it really quickly, or if you can possibly see it really quickly, and it just looks like a great setup overall. And Krish asked in the main chat, at what point do I start trading for the day? So what I do there, um, it really varies from person to person as well. So to, like, avoid over trading, it's really, again, just having a set of rules. It's just implementing that into your rules, and it's all about discipline, because you can have that written down in your rules all day, but if you don't have the discipline to follow those rules, then there's no point. Uh, but when I typically stop trading, Krish actually, um, well, I did explain it, Kevin. Hold on. But Chris actually said, up 5% on the day, be done. Down 5% on the day, be done. So what I like to do, when it comes to being done for the day to avoid overtrading, again, it's kind of like risk to reward to me, in my opinion. So I'll typically allow myself to lose less before I quit, and I'll allow myself to make more than I would typically lose before I quit. So if I'm down 2% on the day, I'll stop. If I'm up 4 to 5% on the day, I typically stop as well. Now it also depends. If it takes me multiple trades to be up 5% on my portfolio in a day, then I'll stop. But if I'm in one trade and my portfolio is up 5% from that one single trade, then I'll keep going. So I mean, there are in a way loopholes to that. But most of the time, yeah. If I'm up, 4 or 5% on the day, like Chris said, I will quit. But I also quit if I'm down 2% on the day. If I don't quit, I just step back, take a break, and I'll come back later until I see any better setups that I like or anything. But once I'm down that much or I'm up that much, I don't actively go out of my way to find trades. But I'm not just done for the day either. I'll pop back in, I'll look every now and then, and I'll see a trade. And if I see like a really good setup I like, I'll enter it. But like I said, I don't go out of my way to find anything. And Kevin asked if I could explain the Bollinger Band support and resistance strategy. I briefly went over it. I didn't sit here and explain it in depth. If any of you guys have questions about that, feel free to ask, and I'll answer to the best of my ability.
As far as finding setups, do you use a scanner? Do you just have a list of tickers that you go through? How do you find setups? If you don't mind me asking.
So to find setups is really simple for me. So I don't really go through a scanner or anything like that. I've just got a set few tickers that I have memorized. Not necessarily memorized, but that I just watch throughout the day. So I'll watch Facebook throughout the day. Every now and then I'll just come over, I'll look at Facebook, see if there's any setups I like on Facebook. But as I'm looking here, there's really nothing. I watch Apple every now and then Microsoft and SPY, and those are the only 4 tickers I really watch. But other than that, no, I don't trade anything else. No scanners. I could see scanners being important maybe if you're like a penny stock trader and you'd like to trade penny stocks a lot. But me, I just trade large caps. And since I do trade large caps, I don't, typically there's no need for me to have a scanner. I just stick to a few select large caps and I call it good. You have any favorite chart patterns? Really cheesy. I really like the head and shoulders, just because it's pretty simple. It's pretty easy to spot. So anytime I see a head and shoulders pattern, I'll typically play it. How does stock volume correlate to price action on the chart? Well, the way that I use it, so for example, we'll just look at 433.42 here. basically, you know, if there's low volume throughout the day and you have this set on your chart and there's a break above this but the volume hasn't changed at all, then it's pretty risky to get in there because there's really not going to be, most likely not going to be as big of a move as you would like. And if anything, you could either get stopped out due to theta, just consolidation all the way through that, or it could just be an instant rejection from that price the minute you get in. So really what you want to look for with volume, and the only thing that I really look for, is whenever I play a break above or a break below one of my support or resistance levels, I just look for slightly abnormal volume before an entry. Chris asked, does the head and shoulders pattern always work? And no. So no, of course, no pattern, nothing in the market is ever going to be 100%. And the head and shoulders pattern itself, like, you don't want to just be like, all right, yeah, I see a head and shoulders, it's time to go short. So what you'll actually want to do, you'll just pretend this is a head and shoulders. It's not, super clear, but we'll just say this is a shoulder. We'll say that's the head and that's the right shoulder. So what you would do, you wouldn't go short here on the head, and you wouldn't go short here just because you see a shoulder formation. So what you would do is you would find the low. So we'll just mark the low of this. Let's call it right there. Of the left shoulder. Boom. Oop. So right there. And so we'll go over here, wait for the head, and we'll wait for a close below the low of that shoulder, of that left shoulder right there. And or you could play the neckline here. You could play a close below the neckline. There's lots of different ways you can trade the head and shoulders. For example, playing the close below the neckline there, boom, that would have worked out in your favor. Playing the close below the left shoulder, that possibly could have also worked out in your favor. But like, again, you just want some sort of confirmation before entering any trade. You don't just want to blindly enter because you see a head and shoulders pattern. Did that kind of go over it decently for you guys? I know Chris just asked. Okay, cool. But yeah, that's typically just how you play the head and shoulders. It's one of my favorite chart patterns, just because of how easy it is to spot. I know, like right here, like the cup and handle and stuff. I'm not big on lots of chart patterns because I know some people, I'm not really sure. I've seen instances where, like, I'll mark out a cup and handle and someone's like, oh, that cup and handle's not validated because it's pointing 30 degrees higher than it should be, or something like that. So I'd typically just avoid those, but I like head and shoulders. Does it make a difference what time frame? No, it really doesn't, Cheesy. You can use any time frame for any chart pattern, really. Let's see if we can find something here. Let me see. Okay, so we'll just say this is a cup and handle. It's on the 1 hour, but it's still a cup and handle. So we could have played, again, the break above the very top here, or the close above that, and again, it would have worked out very well in our favor. And it doesn't matter, again, what time frame you go on. We can go on the 1 minute if you want. But you can pretty much go on any time frame and find a chart pattern. So let me just look again, see if we can find something else that worked out. Check out Microsoft really quick. I'm trying to find something here everybody can recognize. Really just looking for another head and shoulders since we went over that. Let's check out Facebook. If we can't find anything here, I'm just gonna be done looking. But yeah, no, Cheesy. You can pretty much play any chart pattern on any time frame. Again, though, since I am a day trader and I do scalp, I like to use the 3 and the 5 minute more than anything. The 1 minute, in my opinion, is just a little cluttered. a little too much going on. So let's say Microsoft. Give me 1 second, Krish. Okay, so Krish, what you're asking is if Microsoft broke below 280 tomorrow, what contract would I be looking to get? Like if I'd be looking to pick up calls or puts, and what strike price, I assume, Krish? Yeah. Alright, let's take a look here. Alright, so I'm going to go ahead and go on the 4 hour. I'm just going to see what we can't find here. As Krish asked. So we're going to go ahead. I'm going to turn this off really quick. Give me 1 minute. Just clean my chart up a bit. Alright, so I'm going to go ahead, mark 280. Alright, so there's our 280 support line. So we are on the 4 hour. Alright, so we can see every time Microsoft kind of goes around the 280 area, there's typically a bounce up. I feel like you could see this a little bit better on the daily. Yeah, so on the daily, there's, it shows a really good, strong support for 280. So if you wanted to be risky, of course, you could play, immediately when if Microsoft were to go down to touch 280, you could look into getting calls, for maybe like a 285, 290 strike, expiring in a few weeks if you wanted to swing it. And you could just looking to get calls, and that is very risky because of course it could break below and continue to fall. If you wanted to play a little more safe for a reversal to the upside, you could wait for a bullish candle close above 280 around the retest to get in. You could even use other things in your strategy, your personal strategy, to confirm that even further. But looking at the daily chart right now, if Microsoft were to touch 280, I would most likely look into purchasing call contracts. HD still. Okay, so Kevin asked what mistakes I still do sometimes, even though I'm successful at trading. And I will be honest, there are still times where I catch myself, after a successful trade, I will have those feelings of happiness, and again, even happiness when you're trading is a bad emotion. Any emotion, in my opinion, is bad when you are trading. I'll find myself, I don't typically find myself getting upset anymore. I don't think I have in a while, but I still do find myself, getting those weird random bursts of excitement when I make a good trade, and it's something that I'm still working on. And the only way you can really improve in that is, just be aware of it whenever you do feel any type of emotion when you're trading. Just acknowledge it and not really suppress it, but just acknowledge that it's there. And the more you do that, the less it happens. Other mistakes I make, I'll be bored during the day. It's just like, boredom trading, and so nothing's happening throughout the day. Like nothing's going on. All you're doing is staring at charts. You can't find any good setups, and you're bored, and you feel like you have to enter a trade. I'll catch myself doing that sometimes, just giving myself an excuse to be like, oh, that's a decent trade. And I typically go light when I do that. I go really light on my position sizing, but even then, it's still just a bad habit to have. To really avoid those mistakes, it's just really a matter of good discipline. And as far as trading logs go, yeah, I suggest everybody has a trading log, just to keep track of, first of all, your success rate. That's really important, knowing what your success rate is. and it's nice. If you ever want to take a look at Netflix. Yeah, give me 1 second, Wizard. But no, trading logs, very, very important in my opinion. Just even if it's just to know what your success rate is, even if you're not marking down the percentage gain uh, and the percentage loss of your trades, just knowing that it was a gain or a loss, just having track of your success rate. Trading journals as well. If you are a growing trader, after every trade you make, write down what price you entered a trade in, when you exited, the percentage gain, percentage loss, if it was a gain or a loss, what you could have done differently. You write down everything you can think of. Trading journal is very, very useful. Now, Wizard, take a look at Netflix. We will go ahead and do that right now.
Sorry, with the trading journal, do you actually go back and review your trades, or do you think it's just a good thing to write it down and kind of like, I guess, process it as you're writing it down?
Well, both. When I had my trading journal, I don't actually know what happened to mine, but when I did have my trading journal, every day I would go back and I would look and just kind of go over. So like when the trading day for, say it's a Friday and Friday's done, I would look at the trades that I made Friday, and then I'd go back and look to my past trades and see if there's any correlation, to see if I'm making the same mistakes or to see if I'm improving. And it's really a good way to track your growth, and it's a good way to speed up your growth, because those mistakes and those ways to improve are written down on paper, and they're there staring at you every time you open your journal. So it's just a way to constantly be aware of what you're doing wrong and what you could do better. And it just really helps, in my opinion, speeding up your growth as a trader. All right, so we're going to go ahead and take a look at Netflix. Wizard said he has a 337 target to the downside. So let's go ahead. We'll mark out 337. And Wizard, if you don't mind me asking, what exactly makes you have that 337 target? Because I don't, personally, I never ever look at Netflix. So just to know the reason for that target. Yeah, that's also good to do. Cheesy Spy. I actually never even thought of doing that. I never did that. That's definitely, that's definitely a good idea. Dang, Wizard, you got a lot going on, man. Krish asked if I ever average down, and that really depends. So, say you want to trade. Let me think of an example, because I don't average down a lot, like at all. Maybe if I'm in a lotto, and there's a good reason to average down in said lotto. But typically, no, I never really average down. But as Chris said, what are your criteria for average downs? So sometimes you can, like, if you're trading the 9 EMA and you still see like a decent, like the setup still looks good, the trade still looks good, but you're in the red while you're trading, for example, the 9 EMA, and the price is just testing the break below the 9 EMA, but it's looking like it could bounce. You could consider an average down there. If the overall trend is still, to the upside, you could average down there possibly. I typically don't still. I'm trying to think of a really good example that I would average down at. Um, hmm. One main thing when I do average down though, I'll still have my stop loss in place. So I'll have a stop loss at 10%. And as long as I am in the red, but I am above my stop loss still, so I'm not stopped out, and the trade still looks good, you could average down then. But I'll never, I'll never close like I'll never get rid of my stop loss just so I can average down. I would much rather my stop loss hit and respect that. Just it's a discipline thing and it's also a risk management thing. It's just really bad behavior to get rid of your stop loss, in my opinion, to average down. And puppy, I recommend for charting. I recommend Thinkorswim, but for actual trading, I use Webull, and I believe Kevin does as well. I'm not sure if he switched over to Webull yet, but he talked about it to me, and I do think it's a good idea. Yeah, he's switching. But Thinkorswim is my favorite platform ever to chart on. Webull though, Webull is what I trade on. And Wizard, also, if you still want to, poor earnings, been selling off crazy. Also upside, squeezing to the downside. Can't see a real support. Okay, so you see 337 as support. I want to go ahead. Let me take a look at that. Open up the weekly here. Yeah, I could see your reasoning behind that right there. I could definitely understand that. That looks like a good support to me. Yeah, Baby Wizard. I could see. I definitely see 337 as a good support, like you're saying. I agree with that. And yeah, here, I'll go ahead, like you said, Kevin, I'll go ahead and get my trading log right now for you guys, for those that want to take a look. It's not, I mean, it's up to date, but it's not organized like I like it be, so sorry about that. But it is completely up to date. All trades I have made for this year are listed here. And there's my, yeah, and there's my log right there for anybody who wants to, copy the format or anything like that. There you go. But that's what I use. That's how I keep track of my trades there. And credits to Kevin for the log. He made this for me and sent it to me. I didn't actually make this myself. I'm not smart enough to do that. Yeah.
And another question.
Yeah, what's up?
So you have a stop loss in your trimming. Do you cancel the stop loss, trim, and then put the stop loss back? Or how do you,
Okay.
let's say you have 10 contracts and your stop loss is for all 10 contracts. That's a lot of clicks to cancel it.
I
Trim
got you.
3 contracts.
So
Put it back on.
So what I do, I don't actually set hard stop losses. I keep them mental, and I just follow them. And if you have good enough discipline to respect those mental stop losses, then by all means, yeah. But for most, new traders, beginner traders, I do recommend hard stop losses, just so if their stop loss does get close to being hit, maybe they won't. If they're thinking about, you know, removing their stop loss or anything like that, chances are, if they're going to cancel it, maybe it'll get filled. I don't know if it's like a psychology thing, but when you set your stop losses and they're hard stop losses like that, I've noticed that people tend to follow them more than when they have mental stop losses. I'm not exactly sure why. Um, but I was actually talking to somebody about this earlier. He was saying that he used to set mental stop losses, but he would constantly move it down, and it would cause him to lose trades. So, if you're in a hard stop loss, yeah, unfortunately, you would have to set it. When you trim, you would have to cut it. You'd have to remove the stop loss, trim, set the stop loss back, and it is a lot, which is the reason that which is the whole reason that I do mental stop losses. It's just so much easier. You can less clicks. It's more like one click to trim, one click to exit your whole position if your stop loss does hit. It's just difficult for some people, especially when you're starting out, to have that discipline to cut your losses short. And again, stop losses, for those who don't use them, stop losses are very, very important, especially if you catch yourself, letting your losers run and cutting your winners short, because you get excited when you see a winner, so you want to cut it short to make sure it doesn't become a loser. And then your losers, they'll be down 20%. You don't want to let it go because you think it was a good trade and you think it still has a chance to go back up. Next thing you know, you're negative 50% on your trade. So stop loss is a very important thing. And Chris has asked me to go over my SPY 425 put play. Where you did and where you... Yeah, give me 1 second. I actually want to go ahead and take a look at it for a second just to refresh my memory on the whole thing. Alright, in SPY at 8:45 a.m. Alright, so at 8:45 a.m. last Friday, I entered SPY 425 puts at 79 cents a contract, and I closed at 115 per contract for a 45% gain. So we're going to go ahead and we're going to take a look at that right now, and we're going to go over why I did that, because to be honest, I don't remember why I did it either. Let's see. We're about to learn together, guys. 8:45. If I remember correctly, I played, I want to say I played the break below that little support right there. I'm honestly not 100% about that. I don't remember for sure why I entered that. I'm trying to take a look right now. At 8:45 in the morning. That's odd. Why I would enter a trade so early. To be honest, Krish, I don't really remember, man. Oh, you know what? No. I do remember. Okay, so I was on the 5 minute, if I'm correct. I was on the 5 minute. We had 8:45. So what it was, I played the close of this under the 9 EMA, and the reason I didn't play it here is because it was kind of going all over the place still, and it was like right at market open. But I noticed right here there's this red bar, and then that it's slightly bullish, but not exactly bullish. I don't remember the name for that candlestick pattern. If I remember right, it's the I want to say it's an inverted hammer. Not I can't say that with like 100% confidence, but there was that candlestick pattern, and then it was followed by this pretty bearish red candle pattern here, and I played the close and entered puts there, and I just trimmed all the way down, and I got stopped out like right here, but that was what caused me to enter that. It was a pretty decent trade. I think it was like 40 something, just like 45% overall, what we trimmed at, and then got stopped back out at break even. And again, that's really important. Once you're deep enough in profits, moving your stop loss at least to break even is heavily recommended. Show my trading log. Kevin, that's on you, man. You're the tech guy here, not me. Does anybody have any more questions or anything? Because I know the main goal of this whole session for me, I just wanted to briefly, go over risk management, knowing when to take profit, when to cut your losses, kind of just ways to, I guess, manage your emotions while you're trading, avoiding revenge trading, avoiding over trading, basically just overall, like account risk management as a whole, is what I really wanted to go over. And, especially again, all your emotions when you're trading. That's the main thing I wanted to cover, just how to get those under control, whether it be, just practice and experience or lowering your position size, combination of both. But that was really important to me, getting through that, controlling your emotions. Because I see, almost every day people really excited about, and I know it's really, really, really weird to say, but it does bother me when I see people posting in profit and loss channels, super excited over money they made from me. It's good that they're happy. Don't get me wrong. It's great that they're happy that they made money and everything. Because that's the whole reason we're here. We want to help you guys learn as traders. We want to help you guys make money. But at the same time, being excessively happy, being in that euphoric state, as much as weird as it is to say, it really does hinder your trading. It can cause over trading as well. It can cause over trading just as bad as anger can.
Hey, one more question.
Yeah, what's up?
Do you usually options in the money or calls for like the strike bill, the current whatever in the money line is?
Honestly, man, it's just really a matter of what I feel like during that day. Most of the times I do out of the money options just by $1 or $2. I couldn't really give you a solid reason. It's just I'm comfortable with that. I'll typically go $1 or $2 out of the money, especially with how volatile SPY is right now. That's what I like to do. I know Kevin goes a lot of times. He'll go $5 or $6 out of the money. and those can be considered pretty risky. Kevin also does, he'll tell you in his alerts when they're super risky like that, but I typically don't do that. I almost always go super close in the money, or $1 to $2 out of the money.
Do you ever care about the delta or the theta or anything else? Any of the other Greeks?
I don't take into consideration theta, just because I'm normally in and out really quick, and when I'm not, I do have my stop losses in place. So no matter what theta is, if my stop loss hits, my stop loss hits. I don't really care about theta. I do like delta before I enter, just to get a look at how much I would be making for every dollar the contract moves. But really delta, I would say delta is the main one that I look at, but I don't really watch theta.
Thanks, man. And really appreciate your time.
Yeah, man, of course. I'm glad all you guys came in, stopped in to listen. It's been fun too. This is probably the biggest audience I've had so far. And yeah, just like Kevin's saying, really just look at Greeks whenever you're swing trading. The only Greeks that I really look at when I'm day trading, like I said, is delta, and that's just to determine what strike I get in at. Because some have, of course, better deltas than others, and that can really affect your percentage gain. But most of the time, it doesn't vary by much. So even then, you don't have to consider delta. And yeah, Kevin does have a terrible log. He's probably one of the worst traders I've ever seen. Sorry, man. I don't know how I became profitable learning from you, man. But yeah, do any of you guys have any more questions or comments or anything? Like I said, I'll be happy to answer to the best of my ability. It's angels, Kevin. Angels. Ask me a question, Kevin. With your voice, homie. Come on, don't be shy.
Do you ever play the fibs?
Oh man, I actually used to heavily play fibs, and I don't really know what made me want to stop. I just kind of stopped trading fibs, but I'll give you an example of how I trade fibs. I don't do the if I remember right, I don't do the Fibonacci extensions or the Fibonacci retracements. I use fib extensions, and so didn't. What the hell? But yeah, that's how I would trade fibs, even though it's hard to see with my chart the way it is. Hold on. Let me go to something that's not so cluttered. I'll just go to Facebook. But no, I didn't use the retracement Fibonacci's when I used to use fibs. I used the extensions because you can use them to mark out support and resistance zones. As far as I know, anyways. I never saw anything about it on the internet, but I'm sure it's, possible. So, like here, we'll just say this for an example. It's not going to be the greatest, but, here. So you've got your like support levels there, but then if you were to go, do the same thing, but do it in reverse, now you've got your resistance levels. And that's why I use those, just because you can map out what were a lot better support and resistance levels using the retracement or using the extensions compared to the retracements. But I never, like that worked out pretty well. That also, the 208 was pretty respected as well. 208.89, that area was also respected. So I mean, yeah, when I did use Fibonacci's again, I just used the extensions, the retracements. I didn't really see as much use in those, which that could also just be me. But I pretty much stopped using them. I couldn't give you a reason why though.
Much. Okay.
Yeah, I don't know. I think I don't know, man. Grew out of it, I guess.
Yeah.
The chart is much cleaner without them.
What's up now?
The chart is much cleaner without the fib
Oh,
extensions and
fibs.
retracement.
Yeah, man, it really is. And again, I really couldn't tell you why I stopped using them. I mean, they are useful. I will say that. They're definitely a useful tool in my opinion. And yes, this whole session was recorded. Every single bit of it was recorded. Cheesy asked, have I always used Bollinger, and is the Bollinger on default settings? Yes and yes. Ever since I started trading, I've used Bollinger. I haven't always had the same strategy with them. I'm sure you guys have seen the basic strategy on using them on YouTube, just trying to play reversals with them, but I don't do that. That's what I did at first. But then after that, I use the strategy I use now. Do you ever try to re-enter after getting stopped out? Sharknado asks, knowing your setup is really good. Yes, I do, Sharknado. And no, yeah, I do. It just depends though. If the setup is really good, like you said, then I will consider a re-entry. But if there's that voice in the back of my head telling me that I am revenge trading, I'll typically just stay away. I just in case, to make sure I do avoid revenge trading, because you could be telling yourself that it's a good setup, but you could also just be giving yourself an excuse to revenge trade. And SK asked about watch lists. So yeah, I typically don't have a huge watch list. I play damn near the same tickers every day. I'll watch SPY, I watch Microsoft, I watch Facebook, and I watch Apple. Mostly I watch Microsoft and SPY. Those are my favorite tickers. But if nothing's going on with them and there's a good setup with Facebook or Apple, I definitely, I have no problem playing those as well. But it's been quite a while since I've played either of those tickers. But yeah, just to answer your question once again, Shark, if it's a really good setup and I know it's a really good setup, then I have no problem re-entering. But if there, like I said, any slight doubt in the back of my mind about that, and I feel just even a little bit that I could possibly be revenge trading, I won't play. I won't touch it. I'll just take the loss and move on. And that's, in my opinion, the best way to do it. Yeah, of course. Anybody else have any more questions at all?
What's your prediction on SPY tomorrow?
Let's look. Let's go ahead. We'll look at the 1 day. I'm gonna go ahead and clear these. Actually, yeah, I guess I'll leave those. I'm gonna get rid of that though. Bullish 30. Okay, so we've got a gap on the 4 hour. Not sure when or if that will fill, but just keep that in mind.
Futures are pretty red right now.
Oh man, I know. I looked earlier. Futures are deeper in the red right now. Yeah, huge gap down in the 1 hour too. Man. Call me crazy, but if we open above 432, we could possibly see a high of about 437. I want to say, what's futures at right now? Hold on, let me check futures. But yeah, this is definitely a good question. Tough as hell to answer. Futures SPY's at 427. All right, so I'm gonna go ahead. I'm just gonna consider that 427. All right, so futures right now. Looking at SPY, 427 is what SPY is at right now according to the futures, and that also seems to be a good support on the daily. So if we can hold above 427. And not go below that, I guess it really depends. If we open like just above 427 tomorrow, I would have to guess we'll probably trade within a range, would be my guess, between like 430 to 427. Trading in that range all day, and then near end of day we could possibly have an upwards run to, if I had to guess, 433 end of day. If we open at, again, I said above 432, around 432, we could possibly, and I mean like, when I say open at that area, I mean like first thing in the morning, 3 a.m. pre-market hours, open above that, we could possibly see around 436 for the day. But like Kevin said, it is a news market, not really a TA market, and there is a load of uncertainty going on right now. And this chart just looks, God, this chart just looks awful. So definitely not as confident as I normally would be, but that would be my guess. If we open above 432, we could see a high of 436. If we open above 427 but below 430, we could trade within that range for the day. And this is just, again, looking at the daily chart. Looking at the 4 hour, we've got that gap down that needs to fill. So there could definitely be a possibility, that we do come up and touch this area, but also, get rejected and fall back down. There's just a lot of stuff that could happen. There always is. And it's normally, I would never say it's about predicting what the market's going to do. It's going to be about having a plan for whatever the market does, no matter what happens. It's about, in my opinion, going in, looking, considering every possibility, and having a plan for how you're going to play whatever happens. And yes, I'm also.
I have a question on future.
Do what, Sugar?
Yeah, I have a question on futures. Is it typically when futures are red, does that mean it opens green?
So futures, definitely not the expert here. I think Simple Trader is more knowledgeable in futures than I am, so that would be something for him. But to answer this to the best of my knowledge, I believe futures are just the indexes. It's basically just trading the indexes when the actual market itself is closed. That's all it is. I don't think the futures actually indicate what's going to happen the next day. and they are very, very volatile. I'm actually opening up a futures account as we speak, and I plan on live trading during the evening when I'm off work, live trading futures and streaming it to you guys so you guys can follow along and just kind of trade with me. I'm going to be starting with a small amount. I'll probably be starting with like $300 and seeing what we can do with it. And it's definitely going to be a learning process for me and hopefully for you guys as well. I believe Volcad, my futures account is on, I don't know how to pronounce it, Tradeovate or Tradeovit. I'm opening a Tradeovit account and another, I don't remember what the other one is. It's let me go ahead and look. It is TradeStation. That's the other account that I'm using. Can you really, Joe? I didn't know that. I know you could view futures on TOS. I didn't know you could trade them. That's cool. Yeah, that's really neat. I didn't know that. Oh, and SK, to answer your question earlier, asking which ticker I made most of my profits on, SPY. I never really traded SPX at all. I do like to look at VIX though when I do trade SPY at times. If I'm trading the 9 EMA on SPY, if you want to take a look at VIX and use it as confirmation for entries on SPY. So if SPY is going up and VIX is dropping, you can use that as confirmation, if you want to open a long on SPY. And if SPY is dropping and VIX is increasing, and you see confirmation on VIX, you can use that in correlation with SPY to open a short position for SPY. And you need to apply for that level of trading. Yeah, I had no idea that you could trade futures on Thinkorswim. That's really neat. Yeah, of course, SK. And another thing I'd recommend, we can go over this some other time if you guys would like, whether it be me or anybody else. Just a bunch of different candlestick patterns to keep an eye on. I'll actually have to do some studying too to refresh my memory on them all. But we could go over candlestick patterns, what they mean, how to trade them, and how to use them in correlation, say, with the 9 EMA to enter into trades using the 9 EMA as well. Because that's one of my favorite things to do, not just using the 9 EMA, but looking for, looking to see if the chart itself is respecting the 9 EMA, and then using candlestick patterns in correlation with the 9 EMA to enter trades. And it has a super, super high success rate if you use it like that. So if you guys would like to go over that in another live someday, I definitely would be very willing to do that with you guys.
On the candlestick patterns, do you ever use 3 candlestick patterns or just stick to the 2 ones?
The 3 candlestick patterns are my favorite. They are, I believe they are the strongest candlestick patterns actually. But yeah, 3 candlestick patterns would be my primary, be the ones that I primarily use. And the 2 and the 1, of course, also. But I normally do look for 3s, the triple candlestick patterns, before I look for the singular doubles. Yeah, the triples are definitely the strongest. Those are the main ones that I look for as well. All right, you guys have any more questions or Anything you'd like to say? I'm thinking we might call it a night. Oh yeah, of course, guys. All right, is everybody good? No more questions at all? Yeah, what's up, Kevin? One piece of advice I would give, like any piece of advice at all, just the most important thing. Oh man, put me on the spot like that, bro. Let me think for just 1 second. Give me just a moment. I want to make sure this is as valuable as it can be. Hmm. Hmm. Alright, now that's just unfair, bro. Alright, any piece of advice at all that I could give everybody here, if this was the last thing I were to ever tell you guys, if you can't write your own set of rules, copy and paste the rules that we have actually pinned up in this channel now. Copy and paste those, use those. But I definitely recommend, writing, just taking a few hours. It may take a little while, just getting your own set of rules written down, just to kind of go with your trading style, with your trading plan, and follow them. I mean religiously. Don't deviate from them. And even if they can be improved, definitely work to improve them. But what matters is that you're developing the discipline and the self-control to follow those rules no matter what happens in the market. It will help, and just having that set of rules helps with a lot. Like I said, helps with the discipline, helps just helps your success rate overall, because you kind of have a plan. You kind of know what you're going into with every trade, and have something written down. Have a set percentage goal for the day, not necessarily a goal, but like Chris mentioned earlier, to avoid overtrading. Once you make so much, be done for the day. Once you lose so much, also just step back, be done for the day, call it good. Just have a plan written out like that. And like I said, it really helps with damn near everything in the market, everything that you need help with as a trader. It will help you grow, especially again with the whole emotion thing in trading. I can't stress enough, your emotions are your biggest enemy. I really do believe that you need to work towards getting rid of all emotion when you are trading. Just completely eliminate it. French Ninja, he's in the chat here. I went over that with him as well, and I swear the man thinks I'm crazy for it, but getting excited, getting happy when you're in a trade, that is also considered a bad emotion when you're in a trade. And just like I said, just be aware of those emotions, but definitely have a set of rules. It's the most important thing, in my opinion. That is really what helped me on my journey as a trader. And I know it's really basic, it's really simple, but there's a reason it's called the basics. The basics work. Yeah, exactly, Kevin. You know, and another thing too, not only can it cause you to overtrade, but it can also cause you to increase your position sizing. It can give you this feeling of, you know, just overall just overconfidence. You know, you can get one really good trade and now you're like, oh man, I'm a great trader. I'm amazing, you know, because you make 50%, 60% on a trade and you're like, man, I'm great. I need to start upping my position size. And you know, the minute you do that, most of the time, 9 times out of 10, the minute that you up your position size out of overconfidence, that's the trade that's going to burn you. And that's the trade that you're going to have trouble respecting your stop loss on. And that's where you blow up your account. My first account that I had, I actually blew up, and that was the cause of it. And yeah, cheesy. Again, that'll happen. It's just like I said. Again, all emotions will hurt you when you're trading, especially that feeling of euphoria that you get from a good trade. And the more that it happens, the worse it gets. So it's just best. Again, you can't really just not have those feelings, especially when you're new. Even an intermediate trader, you know, it's really hard to eliminate those feelings. But like I said, just at least be aware of them. You know, acknowledge that they're there, understand why they're there, and don't act on them. Yes, actually, SK, I do scale in on my trades sometimes. Um, I've actually, some people seem really confused by it at times. I haven't done it recently, uh, but I will. So say I'm going to go to SPY, for example, and we're just going to pretend, we're going to say 430.51 here, just so you can see it a little bit better. So, for example, I would enter calls, say on the break above 430.51, right? And so we would ride that up to 431.69. And of course, on the way up, we would trim some, like trim all the way up there. But once we broke above 431.69, I would scale back in if there was good buying volume, and I would scale back in and open up another position on calls again. And then I would, I'd basically treat it like a whole new trade. So while it's still kind of the same trade and it can be considered, averaging up, in my mind, that's two separate trades. Did that kind of help answer your question there, SK? Awesome. All right, you guys, anybody else had any questions at all before we call it a night? All right, no more questions. Everybody's good. I hope everybody has a good night. I hope everybody at least learned one thing from this live. If you guys didn't learn at least one thing, I'm very sorry. I tried my best to make sure everybody here got at least a little bit of valuable information out of this. I hope everyone had fun. I know I did. It was nice talking to all you guys. It's 11 p.m. for me, so I'm about to get to bed. I hope everybody has a good night, though. Hope everybody learned something. And, yeah, everybody be safe. Have a good night.